2023. A beautiful sunny day once again here in Gloucester. It's been the most beautiful weather. Maybe it's just New South Wales and Sydney and Gloucester, but it's been beautiful and sunny. It's been another very productive week here in the Frame Funds offices. We've been really focusing on our reversion trading models, and I will provide an update on these over the next week or so. We're just getting very close to the end of this project, so I will provide updates very soon. 5 points for this week. Chinese CPI year on year fell 0.3%. A lot of that was attributed to lackluster demand coming out of the consumer. This really has injected another round of renewed cause for a contraction or a deflationary period in the global economy. Point number two, New Zealand inflation expectations in Q3 rose to 2.83%. This was up from last month, 2.79%. Essentially, it's a very large survey of all business executives, and they look 2 years into the future, and they essentially say where they think and expect inflation to be in 2 years' time. Generally, the market consensus at the moment is that short-term inflation seems to have been achieved, or maintaining the current level of inflation seems to be contained, and businesses largely expect that the Reserve Bank of New Zealand to continue to achieve or targeting to achieve its 1 to 3% range for inflation over the next 2 years. US core inflation month on month was flat at 0.2% in July. It means that there is a headline CPI year on year reading coming in at 3.2%. This is below expectations of 3.3%. It really does show that higher interest rates that have been happening in the economy over the last 12 to 18 months are finally starting to take effect, with prices on a rolling basis and a year-on-year basis still starting to come back down. It looks like markets now have largely expectations are now adjusted to being a hold at the next interest rate meeting. Chinese PPI year on year dropped to negative 4.4%. So this is a real concern. It really does just show that there is some very lackluster demand coming out of the Chinese economy. All of the inputs that are used to produce goods over in China have generally started to deflate and decline due to this lack of domestic demand. The PPI reading may put more pressure on the Chinese government to do some type of fiscal stimulus if these conditions continue. US weekly unemployment claims rose to 248,000. This was up from market expectations at 231,000 as an increase in jobless claims. We have had a very significant period of jobless claims continuing to drop. So this is the first bigger one that has beaten expectations to the upside with more jobless claims. It still is unclear whether historically high interest rates are slowly coming through to the market, or if it is just because businesses are sitting here and saying, okay, we're just going to hold off for a little bit with all this, the new changes to the economy. We can see here a summary of futures contracts and commodity markets and bond markets and currency markets that are traded within our multi-strategy hedge fund. You can see here natural gas has had a very big week. We'll go through a couple of these points in the summary below. You've seen gasoline, palladium, ethanol, heating oil, crude. All of these key inputs have experienced increases over the course of the week, and that has been generally a relatively common theme over the last 2 to 3 weeks. On the downside, you can see soybean meal, coffee, soybeans, cocoa, silver, and copper all leading the declines lower. Heating oil, natural gas, and oil, and if you read through some of these things, there has been a consistent squeeze on supply. However, more recently, there were some sanctions in Russia that has further led to these price movements. One big thing was systematic targeting of a Russian oil tanker by Ukrainian sea drone that added to the worries. And then there's a few other things with Saudi Arabia and one of the American tankers. Wheat and corn were the biggest movers as well. Obviously, you can see those up here where you can actually see Russia again targeted some Ukrainian grain loading facilities in the Ismail port. So again, a lot of this geopolitical and essentially still the war in Russia and Ukraine is still going on, and it is still flowing through to some of these commodity markets. Copper fell as data from China continued to disappoint, as I mentioned above, and you can see that this is sort of flowing through a little bit into some equities where the Russell for the week is down about 2.5%, and the Nasdaq is down about 1.7% for the week. In the Aussie share market, it's quite the inverse from last week, where last week there was a lot of blood on the street where the Aussie market had a bad period. We have seen a slight rebound here with CBA, NAB, Westpac all rebounding. BHP, Fortescue, Rio, relatively mixed, struggling a little bit with iron ore prices hitting new 1 month and month and a half lows. Probably the worst performer or two worst performers over the course of the week, Square or Block, SQ2, that was down about 14%, as well as ResMed was down about 20%. Frame Funds Trend Barometer, you can see that there hasn't really been an awful lot of action here over the last week or so. Some things moving, but as a whole, we're not seeing these big spikes like we have earlier in the year and through the month of June and the start of July. Other than that, if you have any questions about any of the information that I have covered in this weekly update, please feel free to give us a call at the office, or if you would like to just send through an email to admin@framefunds.com.au, we will get back to you with answers to any of your questions. Other than that, have a nice weekend and enjoy the beautiful wintry/summery weather. Speak to you next week.